Well, joining me now for a closer look at the day's market moves is Muhammed Wagley from Sasfin Wealth. Thank you so much for your time, Muhammed. Pretty interesting week that we have had with a flurry of monetary policy decisions and also economic data. I actually noticed that as much as the all share is down at midday, the resources are up, and we do have the gold counters leading the gains on that front. Is it time for another gold rush?
Story of the year so far, Zenati. In fact, 2024 as well. It looks like there's still, quite a bit of momentum in that respect. I definitely sort of wouldn't be sort of betting against it. If you look at sort of like some of the key factors that have been driving that, independent sort of the uncertainty that we see prevailing in global markets, it seems to remain the case, and in that respect, probably continue for the foreseeable future. Probably not as aggressively as we have seen in the past. It is very, very elevated. It's been at all-time highs pretty much for the past 2 years or so, but I'm not really seeing enough of a catalyst for the downside there, so in that respect, it's driven performance here on the JSE this year. It probably will continue to do so.
Yeah, all right. Muhammad, what have you thought of the monetary policy decisions that we've had, and particularly in the US and here at home, that they went in different directions, with the Fed cutting, but the SARB keeping rates steady here at home?
I think let's start with the Fed, because that one came out first, and I think that sort of impacted how we were maybe looking at the SARB subsequent to that. So look, it was more or less nailed on that we would get a rate cut in the Fed. They would start their cycle. So we got the 25 basis points. Obviously, the market being the market, we were a little bit greedy. It sort of the market fell on the back of that. That's because we were hoping maybe for 50 basis points, but that really was never going to happen. And ultimately, it's good to see that the Fed start their cutting cycle. It looks like we'll get another 50 basis points before the end of the year. And I think on the back of that, local investors were hoping, probably not expecting, but hoping that Mr. Kganyago could do something similar for us, ease a bit of pressure on the middle class. And if you have a look at, where the rand is, and, gold is where it's at, and we're going to be exporting that. Inflation is super low. Like there were a lot of things to say that, things would continue to be somewhat stable going forward. And, maybe they could have been proactive and taken another cut. It looks like they didn't do that, and that was maybe on account of expected inflation. It would have been nice to see a rate cut, though. I didn't expect it, but I thought, they could have been a bit more proactive in that respect. But, given sort of the logic, I guess it does make sense. They were somewhat consistent. I think the last cut they told us, or they gave guidance that maybe we weren't going to get this one. So I think there's a bit of disappointment in that respect from a local perspective, but I do think it is somewhat consistent from the Reserve Bank. But it would have absolutely been nice to get another one.
Yeah, it really, really would have been nice, and especially after we got that inflation coming out lower than what people had expected. Well, let's get into the US. Of course, Trump, as much as gold has been the talk of investor conversations, but Trump as well. He is hopping on a call with Chinese President Xi Jinping today, and of course, this is after the talks that we had between the US and China earlier on in the week in Spain, and TikTok was a big focus there. What are the expectations?
Yeah, so it's quite an interesting one. I think nominally, like given what happened earlier in the week, we do expect this deal to go through. But I think there's lots of questions in relation to sort of what iteration of TikTok will American consumers have in front of them. And the reason for that is ByteDance, who owns TikTok, is very sort of coy about the algorithm. That's the main IP that they want to protect. So it looks like they'll be giving the American version some sort of algorithm light, in a sense. So we'll see how that impacts sort of viewership over there, because the TikTok feed is sort of renowned for being super addictive, and that is completely tied to the algorithm. So we'll see how that will work out. It does seem that this is a matter of just finding out the finer details, or sort of ironing out the finer details rather. So it does look like it'll go through. President Trump says he's doing it for the kids, so I imagine kids all over America would be very happy to hear this news. But let's see what sort of iteration that actually comes in. In terms of the money aspect of it, I think that business is actually worth 15-20 odd billion dollars. So there's plenty of money to go around, and I think for the firms that are involved in actually running it over there, it will be quite lucrative. So yeah, good news on that front.
All right. Well, something that investors didn't take as good news is the numbers that came out from Investec. They released a 5-month pre-close trading update there. Financial metrics were interesting because on the bottom line, they either expect that to drop or to rise. And I saw, interestingly, that the return on equity is on the lower end of the medium-term target range. We did see that share dropping over 2%. Was it not an inspiring set of numbers?
Yeah, it definitely wasn't inspiring. I think it's a very diplomatic way of putting it, but it wasn't, it wasn't terrible. Essentially, what they're coming out and saying is that it's probably, our numbers for this year are probably going to look more or less comparable to the ones that they were last year, which is, I suppose, not great. Ideally, you want to see growth here, but given the environment, it does make sense. You touched on this earlier. They're really touching on the lower interest rate environment, and from that perspective, it does make sense. Operationally, they're doing well. In fact, they're doing very well, and this isn't necessarily a surprise from them. So it definitely wasn't a great set of numbers, but I think given the greater context, it does make sense. Ideally would have seen a little bit more growth, but this is, I suppose, what it is within the greater sort of banking context and interest context. It does make sense.
All right. Well, let's get into Mastic. I know that not a lot of people actually look at this one, but it's been quite interesting. They came out with their year-end results, and we did see revenue slowing there by double digits, but that's really where the softness ended because we did see gross profit and headline earnings there having a solid acceleration. Also, dividend increasing 83.3%. I do understand, I think in the prior year, the numbers weren't so good. Was it a better year for Mastic?
Yeah, I think in a nutshell, the answer to that question is absolutely yes. They're coming off very low bases. And if I'm not mistaken, in the prior year, they had cut their dividend massively. So by essentially doubling it, what they're doing is sort of signaling to investors that there's quite a bit more confidence in the business. And look, there's a lot going on in the background just in terms of corporate actions, takeovers and things like that. But I think what investors liked, in addition to the dividend, was, they look like they're stepping into some interesting spaces in relation to AI and things like that. And from that perspective, there was actually quite a few positives to take away from this. As you mentioned, look, it is a smaller ticker. It's not one that is followed very closely, but in isolation, there was quite a bit to like within these within this set of numbers.
All right. Well, Mohammed, before we get to your stock pick, let's take a moment to touch on what counters your industry peers are watching closely.
It's holding a group for the Agnelli family, which started Fiat and has grown the portfolio significantly. So what Fiat has become Stellantis, which is a large motor manufacturer. That's actually had quite a challenging time. But the biggest part of the portfolio is actually a ticker called Race, which is Ferrari, which has done phenomenally well and is actually the third largest and third most valuable car company in the world, seen as a luxury brand, produces 14,000 cars a year only, but has a massive market capitalization. So that's the anchor of the portfolio. The key attraction here is you can enter these assets, and they also have assets in Philips and a big unlisted portfolio and quite a diversified portfolio across Europe at a 54% discount to NAV. So you're getting a quality family-run operation, holding company with a very strong hand at the helm there, but all at a massive discount to NAV. And as they do buybacks and accretive acquisitions and corporate actions, that NAV should continue to grow and the discount should narrow, so you'll get a double whammy in terms of the performance.
One that's basically, to give you a very simplistic summary of the company, building the plumbing for data centers, right? So very much a position that you have to take a view on the AI, the broader AI theme, right? The build out of data centers is pretty key for this. The reason we like Credo is what they're building is effectively, like I said, that plumbing, sort of the cables and the infrastructure in the background. So what operates in between the chips, whether it's NVIDIA or whoever it might be, because what we like to look at is the bottlenecks. So you might have the latest and greatest NVIDIA chips, but if you have bottlenecks at other places in that data center, that's sort of the defining factor on how well that data center can operate. So they focused on very high speed connectivity, sort of cabling and systems in between these data chips, and also power usage. So a lot of their products are sort of enhancing value in terms of power consumption, which we know is a major concern for AI data centers.
Well, Muhammad, as we were talking about Mustec and what they're doing in the AI space, Jordan, they're choosing Credo Technology Group. I'd actually never heard of it. Also playing on the AI theme. Good direction?
Yeah, I think generally he comes with pretty decent picks. This is one that I wasn't too familiar on, but it's definitely interesting. You know, if you sort of listen to what Jordan's saying there, you know, it's not as if sort of he's picking a winner in the AI space.
Yeah.
Essentially, what he's betting on is the AI space is going to be here to stay, and Credo represents almost a picks and shovels play in that sense. So you don't have to pick the winner, but you know, whoever does win, and pretty much everybody else will use these company services because the infrastructure is pretty much ubiquitous sort of in that space. Look, I think he did touch on this as well. It does look a little bit expensive, so you've got to be intentional about where you want to get into this one.
Okay.
But it's definitely worth having on the radar. I think quite interesting. Yeah, worth looking into there.
All right.
And then the other one.
Exo, a new
Yeah.
one as well. Investment holding company that's
Interesting.
family controlled.
Yeah, so the family in question is the Agnelli family. They're like the most popular, or they're the Kennedys of the Italian world in many ways, you know, and they're very sort of diversified across businesses. But I think, you know, and he mentioned it there, the anchor in this respect is Ferrari, you know, and so I suppose I'd probably want a direct exposure there.
Okay.
But I think the point that he's making is that this one is heavily undervalued at the moment. You know, if you look at the charts, it would corroborate that, and from that perspective, you know, there is quite a bit of value here. It's just the sort of thing where I'd want to catch it on the way up. But yeah, from a valuation perspective, looks phenomenal, and you're getting Ferrari, you know, so there's a lot to like there.
All right. Well, what else do you like your stock pick for today?
So I'm going to go with ASML, you know, not really breaking the mold here. It's always, what do they say about it? It's your favorite analyst's favorite company, right?
Yes.
You know, so it's not really a new one, but it's a great company. But if you look relative to peers over the past year or so, it really hasn't performed well. You know, a lot of those reasons are obvious. You know, there's the tariff hangover, you know, and I suppose just everything that's been going around in terms of, you know, the uncertainty in relation to the semiconductor space as well. But what we are seeing is a bit of a pickup in the momentum there, you know, and I think in that respect, yesterday's news of NVIDIA taking a minority stake in Intel, which is obviously a big client of them, that was big news for them and could potentially serve as a little bit of a boost from that momentum perspective. I wouldn't say that it's necessarily a turnaround or anything like that, because ultimately the business is doing well, but I just think that, you know, we're seeing quite a bit of momentum here, and I think that could continue. So ASML.
All right. Well, thank you so much for your time and for your insights on what is currently moving investors' money. Muhammad, that was Muhammed Wagley from Sasfin Wealth.